Hello traders, this is Ed. Welcome to Ed Traders channel. So today I want to teach you the concept of chart patterns, how to understand the chart patterns in the eye of institutions as a retail trader. So first of all, when you want to tackle the concept of chart patterns, you have to understand what they mean. And chart patterns in various time frames can have varied accuracy, although the time is fractals. But if you see chart patterns on the daily, weekly, monthly, they have more higher probability of working out compared to the chart patterns in the lower time frame. So the first thing you have to understand is to understand what this chart pattern is, to know what they represent in the eye of a big institution. So one of the first thing, if you want to understand chart patterns, is for you to know exactly the point where when you see chart patterns, there's a high probability of them working out. So they usually work out at points of interest. So that's the first thing you have to understand. What are point of interest? Point of interest are things like support and resistance. So basically, even before I list them, one of the things you have to understand is that these chart patterns, they are like the tools that the institutions are using to get into the market. When I say get into the market, there's a way institutions get into the market. Before they get into the market, at least the retail traders have to bleed a bit because they have a lot of money in case if they want to buy and there's no a lot of people that are to sell to them. They have to force retail traders to sell to them or other small institutions, to sell to them who are participating in forex market. So in doing this, that's when we come up with various chart patterns. And in historically, it has been noted that these chart patterns have a certain level of accuracy, and they're just few footprints of large institutions as they are getting in the market. They have to manipulate the price before they get in. So as I've indicated, that it is very necessary for you to understand what these chart patterns represent, and it's also necessary for you to know exactly where they're supposed to print in the chart. So let's go. The first thing, if you want to understand these chart patterns, as I've said before, you have to understand the point of interest, the zones where these chart patterns have to be printed. So for them to have a meaning. So they are printed basically in the point of interest like support and resistance, the Fibonacci zones, trend lines, and the reason why they are printed in these zones is because these are concepts and structures that for a long time the retail traders have been using this concept to trade. And since the retail traders have been using this concept to trade, those people who have a lot of money, uh, who have a lot of money in this market, the moment they want to get into the market, the lower traders using the same structure that they have been taught for a long time. So let's see. Let's take an example of one of the POI I've talked about. Let's see, we have something like a resistance zone here. For example, the market is approaching that zone. The market is approaching that zone. The market probably is in the uptrend. The market is approaching this zone, high, low. We have a higher high. We have a high low, higher low. We have a higher high. We have a higher low. We have a higher high. We have a higher low. Then the moment the market reaches this structure, at this zone, at this zone, both retail traders and the big institutions, they know probably they want to get into this zone. These zones are not only known by retail traders, even the big institution or whatever them, they know what's really happening. You see, so the moment we come to a zone like this, what happened is that the moment they touch this zone, they give an impression first. So that impression is what we call inducing traders. They are inducing the retail traders to get into the market. So why are they doing that? Imagine, for example, big institutions maybe at a time per time they want to get into the market with something like $1 billion, for example. The moment they get in, they want to sell because that zone they want to sell is a very premium zone they want to sell. But at the same time, though they want to sell at that zone, though they want to sell at that zone, there's not enough people who can buy from them. You see, they know enough people who can buy from them. So what they do is that they force people, it is like a necessary evil. They have to do that in order for them to get to the market. So the moment they touch this zone like this, they will give some bearish candle, some bearish impression. So the moment they give that bearish impression, there are people who will be getting in the market that the market is changing. The market is changing. So the moment they start doing that, what's happening? Those people had placed their stop loss on top of this level here. So the moment they place their stop loss on the level here, they break that zone, they take those stop losses, those liquidity points, and then they come to a level like this. The moment they break this zone, what happens? the breakout traders are saying this market is going up, it has broken this key zone, this market is going up. Then before knowing it, they come down, boom, just like that. The moment they come down like this, already probably you know the market, the chart pattern I'm drawing here. Again, there are people who are saying it has moved down like that, it is moving down. There are people who are selling here. Boom, they're coming up again. They are taking those stop losses, and then after that, you will see the move is starting. So at that point, at least they have found enough people who are buying from them as they are selling in this way, so they will be moving down smoothly, just like that. So this is one of the chart patterns called head and shoulder. So if you see such kind of a thing, you have to take that trade the moment it's coming down like this, because there's also sometimes they would want to play around with some consolidation here, wake on top. So what is the deal? Most of the time, maybe for those of you who have listened to some uh, videos here and there, YouTube, whatever it is, you will remember that what is being said is that at least you have to wait for it to break this neckline and then retest that neckline. At that moment, there are people who are trapped on top there. The people are bleeding, people are crying, so they don't have anything to do there. They will be moving to another zone. Okay, so that's really awesome. So that's a basics of understanding chart pattern. So every moment you come to a point of interest, so just think every point you want to sell. If maybe you can see such kind of an impression, and if in case it is head and shoulder, this head at least have to break fast out of that zone before coming down, because there are some POIs that you will find they're looking like this. There's a head and shoulder, but that head and shoulder, the head is tipping this zone, the top of that POI zone, according to maybe the techniques. And because if the head has passed through that POI zone, what you know is that an extreme, they are really lowered a lot of traders there. Then they return inside and retest and come down and retest the neckline. That's a very significant structure to see. And from that point, at least you'll be able to trade. The neckline will be tested and you'll be trade going down. So that's a very nice conference, a very nice thing. You have to see them. And as I've told you before, that seeing this thing on the daily time frame, weekly time frame, and monthly time frame, they have a strong confidence compared to a lower time frame. Then in my other video, I talked about support and resistance, and these are the kind of information that when you see on support and resistance, at least you will be able to understand. And even these structures can help you to tweak support and resistance. Why? Because, for example, a structure like head and shoulder, that head, it has at least break through that structure, and it is just applying the same principle. The moment it breaks through that structure, using maybe some algorithm, whatever it is, that are able to detect some level of support and resistance maybe without human intervention, at least they are able at least to detect some zones. And in case if there is a common zone they're detecting there, probably if it's something common, maybe if as a trader, since you are following the footprints of institutions, whether they're using algorithm, whatever it is, at least if you see that head is going there and maybe your support and resistance is almost at the top there, at least you can adjust it to the shoulder here, and then the head is breaking all over up there, and then you're good to go. The best thing is at least on this shoulder, you have to see some rejection on this zone. That is a good way of readjusting your POI zone. So guys, this is what I want to talk about. It's so brief, I know, but I will be talking more on my other videos coming. So ensure you like, you subscribe, and you comment, because by commenting, probably I'll be able to understand and know the next point you want me to talk about. So all the best, investors. Let's meet in the next video. Thank you. I'm out.